David, welcome. Just talk to me about some of the biggest investment trends we're seeing in North America at the moment.
Of course. So we're focused on opportunistic credit, special situations, and private equity. And first off, people are just sometimes surprised by the amount of opportunity that we're seeing in North America right now. We like the complex stuff. We invest in businesses in transformation, companies going through cycles, even buying businesses out of bankruptcy. There's a lot more of that going on than people expect for a world where US GDP growth is positive, equity markets are at all-time highs. And what we're finding is the economic cycle we have in the US, solidly in plus territory, it's been uneven. The benefit across the economy hasn't been the same. Sectors like real estate, construction, manufacturing, it's almost 30% of the economy, and it's not doing as well as you'd think from the headlines. At the same time, in the credit world, we're finding 5% interest rates, of course, for the first time in 15 years. Companies' capital structures, they just weren't built for a 5% world. So more of them are defaulting, more of them are fixing their debt outside of a court, and that creates opportunities for a firm like ours. So we've bought 5 businesses in the last few years here in North America, all in these kinds of different interesting special situations, good companies, market leaders who are growing, but they were in some kind of a jam. And we've been able to come into those situations and help those companies out by making this kind of an opportunistic investment. At the same time, there have been a lot of loans, there's been distressed debt buys too, and it's all yielded an interesting a cycle of opportunity for us.
How do you adapt your investment strategy to changing market conditions?
Yeah, and so we do 2 things. We go to where the opportunity is, and for us, that's a broad geographic reach. About half of our firm is based in Western Europe, about half here in North America. It's a broad strategy reach, everything from buying into public credit to making private loans to buying businesses and helping them through the turnaround. And we also go across asset classes. Many investors in our space, they're all corporates or they're all real estate. We do a real mix of those, of corporate businesses and real and hard asset classes. And that lets us go to where the opportunity is at different points in the cycle. There's always a cycle going on somewhere, if you know how to find it and if you have some of the resources available to actually go and take advantage of it.
Where do you see the key opportunities over the next few years for the asset management industry?
Yeah, it's okay. I think of it in terms of industries, and I think of it in terms of that credit cycle we were talking about. And so, look, with that credit cycle, this 5% interest rate world, it's something all of private equity has to adapt to. It's something all of the credit world has to adapt to, and it spins off all kinds of different interesting opportunities. You know, private equity funds are under more pressure than we've seen here in 10 years, right? They're portfolio companies, again, they just weren't made for a 5% type world. And they didn't all get the growth that they had bargained for. And so we see a lot of opportunity in buying businesses from them that need a little bit of capital, need a little bit of tender loving care. And we see opportunities on the credit side to help out with these different types of creative refinancings, lending into something with a complex structure, lending into a business where that economic cycle hasn't been so easy on them.
David, thank you so much.
Thank you.